Hey all, welcome to Share Trick. Friends, for this weekend, I want to do something different. I just want to invest 3 or 4 minutes to share my frustration and probably yours as well about what's happening in the stock market and the economy, and frankly, how it all impacts us as retail investors. Let's be honest, it feels like the game is rigged. Markets are swinging wildly on tweets, offhand press statements, or sudden tariffs. And while we are left trying to make sense of candlesticks and charts, I suspect some well connected folks are quietly raking in profits. Maybe 10 years from now, we'll find out exactly who knew what and when. But as a retiree, I find it deeply frustrating. I planned carefully, built wealth over decades through a salaried career, invested in my home, a few renters, and dividend paying stocks. Plan A was to live off stock dividends. Plan B, as a backup, was rental income. Both are now under pressure. Mortgage rates are up, rental yields are down, and tenants are struggling to pay rents because they are losing their job and they are not having enough income to pay for their expenses. Meanwhile, even blue chip stocks like Berkshire Hathaway are feeling the heat. They are moving capital to Japan. And why? Because of this chaotic tariff regime. Let's talk about those tariffs. First, China. I think the damage with the China tariff is already in place on the supply chains. Now we are looking at a 50% tariff on European goods. Add to that pressure on Apple to pull out of India, while US and India are trying to negotiate a trade deadline on a tight 90-day timeline. It's a mess. And here is something to consider. Have you ever worked for a boss who changes their mind every other day? That's what it must feel like for the people negotiating these deals between US and China and US and India. You are halfway through building a policy, halfway through a deal, then boom, a tweet changes everything. And what happens to technical analysis in this environment? Can we really trust bull flags to break up and bear flags to break down? Or are we just flipping a coin every time someone holds a press conference? Coming up next, the deeper implications for fundamental analysis when policy becomes unpredictable. Look, the damage is already done. We just haven't seen all of it play out yet. Supply chains are strained, manufacturing plants are in limbo, and now they're targeting institutions like Harvard. Blocking international students, pulling grants midway through degrees. Who pays the price for this? Students and their families? The global reputation of US education gets tarnished. Yes, the courts may step in eventually, but until then, fear spreads, disruption continues, and this isn't how a leading economy treats its future talent or its best companies. So, what is the end game here, I ask, and I can't find an end game. Do we want a stock market that nobody trusts? Do we want to cripple world-class companies and institutions that lead their fields in the world? What exactly are we trying to achieve here? Because if we as retail investors actually knew what the end game is, we are very well capable of planning better, adjusting our portfolios and managing our risks. But as it stands, there is no safe haven. This volatility isn't just hurting Wall Street, it's shaking global markets. How can any country aspire to greatness when it is so polarized and every major decision ends up tangled in court battles? I'm not here to rant for the sake of it. I'm here to ask you, do you feel the same way or do you feel differently? Please drop your thoughts in the comment section. I genuinely want to hear from you. Let's talk about this calmly, rationally, because if retail investors like us don't speak up, no one else will. Now, thanks for hearing my diatribe. Let me go to the TradingView platform and do what we always do. That is, look at where the indices are and try to make sense out of it. Well, here we are in the TradingView platform looking at S&P 500 futures, and you can see that has fallen below our minor line of support at 5,833.75. Now this becomes a minor line of resistance. And for us, for Tuesday, our support is going to be 5,711.50. But remember, Monday is going to be a day off. And I think we'll see the last few minutes of the day showing us the future market is still open. The last few minutes of the day will show us where things are going as far as the future market is concerned. Now, MACD is on top of the signal line, and the next step is to become red. Momentum is also dropping. NASDAQ has managed to bounce back from this diagonal line of support that we had. And for today, it was 20,796.75. It pierced through this and went back up again. So NASDAQ seems to be a bit safe, but MACD is ready to become bearish. It's on top of the signal line right now. If you look at the dollar index, it managed to fall below our line of support of 99.236. So I'm going to mark this as a line of resistance for now. And if you look at the 10-year yield, it's managed to bounce back from this diagonal line of support, and it is still elevated as compared to where it was just a couple of days before. So things are not yet improved for the better. Now, let us go on and have a look at where the indices ended for the day. S&P 500 is bouncing off this line of support out here. As we mentioned, it's above 5,768.32. It came in, it bounced back, it touched the line, and then it bounced back. So technical analysis still seems to be working, and we have started to do a gap fill out here. The question is, are we going to fill up this gap completely? In order to fill up this gap completely, we have to break down below this diagonal line of support. So Monday will give us an idea, but we can already see that MACD is on top of the signal line. The next step is being bearish. Now, NASDAQ managed to bounce on top of this horizontal line of support, the minor line of support at 20,842. It is still at 20,915. So this support worked for today, but we'll have to see what happens tomorrow. Same story out here. MACD is ready to become bearish. Now, VIX was elevated. It was up 9.92% during the day. And we have gold, which was up 1.98%, moving towards this line of support out here. Now, having said that, let us go on and have a look at Genomic stocks, where they ended up. Prime was up 4.88% today. Again, resistance and support have not changed. It is the same as it was for yesterday. Intelia was down 3.17%. Resistance support remained the same like it was the previous day. Caribou Biosciences was down 6.85%. Resistance and support are identical for the next day. Of course, I'll make another video on Tuesday, and if possible on Monday before the market, so that I can do a little bit of forward projection, but I want to keep this quick, so I'm skipping very quickly. Beam also is within the same range like yesterday, so no change in the resistance and support. Alt Immune is down 1.04%. Resistance continues to be 5.80, support continues to be 5.33, and Verve was down 0.46%, and it is right now at 4.36, and we had a line of resistance at 4.37, and that still remains intact because we are at 4.36 when we closed. Our next support is probably at 4.15. Editas was down 4.32%. Support continues to be 1.35. Resistance continues to be 1.70. Right now we are at 1.55. Illumina was down 0.21% during the day, and it's presently at 80.38, and we had this line of resistance at 80.64. That continues to be a line of resistance for us, and our support is continuing to be 74.10. CRISPR Therapeutics was down 1.79%. Currently it's at 36.81. We had a resistance at 38.59, which continues to be a resistance. We had a support at 36.99. That becomes a resistance, and that's going to be the resistance for tomorrow. And support is going to be 33.15 when the market reopens on Tuesday. Allogene was down 2.75%. Support resistance are the same. Grail was up 3.64%. Support remains the same at 37.63. Resistance remains the same at 45.47. Currently, we are at 40.18. Then we look at ARCG, which was up 0.48%. Support continues to be 20.31. Right now, we are at 20.98. And our resistance at 21.56 remains intact. Vertex was up 0.45%. Right now, we are at 435.17. Therefore, support continues to be 429.01, and resistance continues to be 449.22. Ginkgo Bioworks is up 2.04%. Same support as before, 6.55. Same resistance as before. It's going to be 8.32, and currently we're at 6.99. Unicure was down 0.46%. Right now it's at 15.16. Support is 13.37, resistance is 16.04. IMTX was down 1.44%. And I think this reverse head and shoulders is not likely to pan out. But I'm thinking that this is a bull flag on this flagpole. So I'll wait and see if this bull flag can then take us back to the target of 7.37. And that kind of brings me to an end of today's session, my friends. I'm sorry for my rant at the beginning,